Hi everybody, and welcome to Axion Token channel. So let's have a quick look at how things are rolling. We're going to get into talking about how a certificate of deposit works to grow your money. So Axion is a certificate of deposit. So we're going to have a quick look at that. So let's check that one out and just get the sound check right as we move into this. So looking good, and here we go. So we're going to have a look at how a certificate of deposit works to grow your money. There's a great article and a great introduction to certificate of deposits. The Axion token is basically a certificate deposit, but it has been supercharged. So let's have a look at what a certificate of deposit is from a bank, which is typically like a term deposit if you're in the southern hemisphere. Certificate of deposit is pretty much a phrase used in the northern hemisphere, like the United States. So we're going to have a quick look at that now. So we're going to have a quick look through this article, a really good one. So let's go. Certificate deposits, how they work to grow your money. So you're probably already having a checking account or a savings account from which you pay bills monthly and cover daily expenses. You might even have a retirement savings account like a 401k or IRA. So these are typically American products, 401ks, particularly the diversified portfolios and benefit from the stock market going up. So that's pretty much what they are. So if you also have some extra money that you don't need right away, consider growing it with a certificate of deposit. So Axion is a certificate of deposit, but it's different from a bank one in a few ways. It's really a supercharged certificate of deposit, and we're going to look at that. So it's really for an introduction to people that are not familiar with Axion and help grow your money, basically. A CD or a certificate of deposit may give you a higher return than a traditional savings account. That's certainly true for Axion under certain circumstances. Now, there are risks, and we will talk about that a bit later, while still allowing you to withdraw your money after a set period of time that you select when you open the account. So Axion works pretty similar to that, and we're going to get into that. But how do CDs work? A certificate of deposit is a type of savings account where you agree to keep your money in for a certain amount of time, known as a term, right, or a period of time that you might have in. The term could be 3 or 6 months, 1 year or longer, so different periods of time. Here are some key things to know if you're considering a CD. Opening a CD or certificate of deposit, usually you'll have to deposit a minimum amount of money. This could be $250, $500, or up to $1,000. Some CDs have no minimum opening deposit. So in Axion, that is a Axion token, which is a Ethereum token. It's a cryptocurrency. So it's different from using US dollars or other form of what they call fiat currency. It might be the pound or Aussie dollar, things like that. Interest, once you deposit your money in a CD account, the bank knows it will have your money available for the term to make loans or other uses. So this is where it differs, that the bank actually uses that money on its balance sheet in certain ways. The bank pays you interest for your commitment. Interest payments vary, and if you purchase a 1-year CD, the interest you earn may be added in a single payment at the end of the year. So that's one way it happens. In Axion, you get paid interest every day, and we'll talk a bit more about that later. Or some interest may be added to your account each day or month. So that's how that works. Whereas Axion, it's definitely daily, and it goes into what I call a reward pool. You get interest, and it's 8% per year. Plus, you get some extra bonuses. That's why I say it's supercharged compared to a normal bank certificate of deposit. Pay attention to how interest accumulates. If your money gains interest daily, you'll earn more interest over time than if interest is added yearly. And so that's how it works on Axion, and it makes it really powerful. The rate at which interest is added can be different than the rate at which it's paid, so it's important to read the terms closely. Your bank will tell you how much interest you will earn by giving you an annual percentage yield, or APY. So that's another topic that we're going to look at in another video. This APY, it helps you compare different CD options by comparing the annual percentage yield or return. So that's pretty interesting. Axion, it's daily, so it's pretty neat, and it just accumulates. It also, Axion is a bit more complicated, that it has what they call a share rate, which essentially is a way of compounding. And obviously, the earlier you get in, you get rewarded with more shares because the share rate's lower. as the share rate rises over time, you get less shares. So that's pretty much how that works. If you have more shares, you get more of the reward pool, and obviously in the reward pool you get 8% inflation going in there on a per day basis, and 8% per annum on a per day basis, and you also get what they call auction market buybacks, where a auction is run as an addition to the standard certificate deposit that is used to buy Axion on the market, and from people that enter the auction with Ethereum. That Axion that's bought on the market then goes into the reward pool with the 8% interest per annum, which is paid daily, and that is then given back to people that have certificate deposits or that are stakers. So that's how that works. So it's a pretty supercharged mechanism for certificate deposits, and it's actually it's got, while it has some different risk aspects to a standard bank deposit, it has a lot of upside. So the risk reward is in a different category, but the product is essentially the same, except it's been supercharged. So time, in exchange for agreeing to leave your money in the account for the full term, you'll earn a higher interest rate than you would with a traditional savings account or checking account. Now that's typically true with Axion as well. Actually it's a supercharged return, but you must take into account that there is an underlying price for Axion, and that is probably the biggest risk over time. Typically, the longer you leave money in an account that pays interest, the more money you make, and that's very true in Axion. So obviously, the longer that you stake, you will get or have your term deposit or certificate deposit period, you will actually get way more of the reward pool, which has, as I said, the 8% per annum inflation paid daily, and the Axion bought in the auctions via the auctions into the market. So it's pretty much the way that works. So the longer you pay, the more shares you have and the more rewards you get, therefore you get a better return. You may get higher interest in rates in longer term CDs than in short ones, and that's pretty much how Axion works too. So how an annual percentage yield works, this is a very basic diagram. It's a great way of seeing it. So let's say that you had 1,000 US dollars, you put it in for 36 months and it was compounding daily. Your annual percentage yield would be 2.5381%. So there's a good example, and this is based on a bank rate CD calculator. So the amount after 3 years would be $1,077.88. So that's how that works. Now, Axion is a supercharged return, so obviously much higher. There's some more risk involved in the sense that it has an underlying Axion price, but the actual volume based of the return is supercharged. So there's 8% per annum paid daily plus the auction market buyback, so pretty neat. Now maturity, your CD reaches maturity at the end of the term you choose when you open the account. Then either you can withdraw the money or you can reinvest in another CD. If you do nothing, a bank typically will automatically reinvest your money in another CD or certificate deposit with the same term. If you want to withdraw your money or move it to a CD with a longer or shorter term, you'll need to let the bank know during the grace period of the CD. This is a period of time after the CD matures during which you can make changes to your account with no penalty. Now, talking about penalties, if in Axion, the way it works is that the more people that stake, the less amount of Axions on the market, and therefore that supports a higher price generally over time. And so the basic idea is to have a penalty on anyone that breaks their stake or their term deposit or their certificate deposit period early. They get a penalty, and that penalty therefore goes back into eventually into rewards for existing stakers or holders that have basically the Axion certificate deposit in place. Then you can transfer your deposit to your checking or savings account, or you can purchase another CD with a different term. That's true with Axion as well. So once your stake is matured, you can then withdraw that for a small fee, depending on what the Ethereum charges are at the time. And that will then go to your wallet, or you can decide to reinvest it and restake it. That is. So the terminology in Axion and on crypto is a little different. Instead of saying a certificate deposit, we really talk about the term stake. So we stake a certain amount of crypto, but it's essentially equivalent. Early withdrawal, and this comes back to the Axion penalties, which are designed to really make people stake longer and not break their stakes. So in other words, meet the end of their term. Otherwise, they face penalties. If you withdraw money before the CD's terms ends, you'll usually have to pay a penalty. This penalty varies, but you may have to give up some of your interest earnings, sometimes as much as 3 or 6 months worth. Now in Axion that actually can be much more higher, so therefore penalties can actually affect your principal, especially if you broke early. That would be a very high penalty on your principal. So typically people don't break their stakes or their certificate deposits early. The alternative things to do is that people often do a staking ladder, and that's what we'll get into the next topic. So laddering, many savers may try to take advantage of the higher interest rate CDs tend to offer, while also attempting to keep their savings semi-liquid. They often do this by purchasing more than one CD, and that's what you can do with Axion. You can have multiple stakes or CDs, and that can mature over different periods of time. For example, you might deposit money in a 1 year, 2 year, 3 year, 4 year, 5 year CD, a strategy known as laddering. And this is what we have also in crypto and for Axion is stake laddering. With this approach, one CD would mature each year and you would be able to access the original funds and earned interest without a penalty, paying a penalty. This may be a valuable approach if interest rates rise more generally throughout the economy. When interest rates increase broadly, you are likely to earn a higher interest rate on a new CD account. So that's true too. So with Axion, it depends on, they also have 8% inflation per year paid daily, but you also have the auction market buybacks, which you use to buy Axion on the open market on Uniswap, which is the biggest decentralized exchange in the world for crypto. And those Axions go into a reward pool, and so that creates a very high return. So obviously the amount of inflation in a year based on Axion is about 50 billion plus extra auctions that would be run to incentivize higher staking percentages. So that also supports the price longer term. When should you consider a CD? So this is a good decision way if you're new to CDs or in particular Axion staking. This is a good one to look at. CDs may be a good choice if you have budgeted well and have some money in savings that you're unlikely to need right away. And I think that's very important for a personal requirements, is that you don't need the money right away typically. Considering the other CDs pros, it's low risk investment. CDs from banks are generally FDIC insured. That's insured by Federal Deposit Insurance Corporation. So in the case of Axion, that is not the case. So Axion is not insured. So if you do a stake in Axion, it is not insured. If your bank participates, your CD deposit generally is protected up to 250,000 US dollars, making CDs a safer investment than stocks, which are not insured against loss of principal. So this particular aspect does not apply to Axion, therefore makes Axion a higher risk, higher return offering, but based on a certificate of deposit model. Savings motivation. When you open a CD account, the penalty for withdrawing your deposit before the term ends can be a strong incentive not to spend money you plan to save. If you want to add extra protection to your savings goal, CD may be a good option. CD accounts are less common than checking or savings accounts. Householders with CDs tend to hold a lot more money in them than they do in checking and savings account, according to the US Federal Reserve. So that's true, and Axion is a wonderful savings place, and obviously the higher the staking in Axion, pretty much, from my knowledge, has the highest staking ratio, about 80% or just 80.5%. Which is very high, and they have a target of obviously getting up to 90 to 95%, which supports the price over time. When is a CD not right for you? If you're uncertain about your spending plans for the next few months or years, or if you will need to take money out of savings soon for a major repurchase or purchase, a CD may not be the best choice. The penalty for early withdrawal removes some flexibility and value. Additionally, they are not a good substitute for a broader strategy to invest in retirement because they generally earn lower interest relative to other options, such as purchasing stocks, bonds, or mutual funds. This means that it can be harder to use CDs to accumulate the funds you will need for retirement. Now, that's not true in Axion. Axion is a supercharged certificate deposit, and it has the auction market buybacks, as well as penalties feeding in through to your returns. However, the underlying price is always an issue that you would not have a certificate deposit, and as well as insurance through the basic certificate of deposit types that the banks offer. So it is definitely a higher risk reward option. Types of accounts by household. So this is an interesting look. Transaction accounts. So this is 2013 and 2016, so 93% and 98%. Certificate deposits were 7.8% and 6.5% respectively between 2013 and 2016. So they are a specialist product, and basically Axion has supercharged those results. and created a great upside. Median dollar value, so it just shows you some of the values there that you can have. And what types of CDs are available? There are traditional CDs. These CDs accounts are most common and have fixed interest rates and terms. This means the interest rate and length of time you will keep your deposit in the account are set when you make that initial deposit, and they won't change until the CD matures. Traditional CDs also require you to pay a penalty if you withdraw your money before the account matures, but there are other types of CDs with different terms that could be a good fit for your savings plans. A trade-up CD. This type of CD offers a lower interest rate at the beginning of the term than a traditional CD does. However, it also gives you an opportunity to earn more if interest rates rise on CDs with similar terms before your CD matures. You can choose to raise the interest rate of your account at least once during the term. If rates don't rise, however, you could miss out on the higher interest rates offered by traditional CDs. A trade-up CD could be a good choice if you expect interest rates to increase soon. Then there's a step-up CD. Like most CDs, a step-up CD has a set interest rate at the beginning of its term. A step-up CD also typically starts with a lower interest rate than a traditional CD with a similar term. But unlike other CDs, the rate on a step-up CD rises at specific stages over the life of the CD. For example, in a 28-month CD, the interest rate might rise after 7, 14, or 21 months. The step-up CD may be a useful option if you expect interest rates to rise, so that's a very important part there. You actually expect them to rise, but you are concerned about having to choose the best time to increase the rate, as you would with a trade-up CD. Then the fourth option in traditional banking is a no penalty CD. Suppose that you are interested in purchasing a CD, but you're unsure about whether you need the money before the CD term ends. A no penalty CD, as its name suggests, does not require you to pay a penalty if you withdraw your money before the account matures. The trade-off is that this type of CD generally offers a lower interest rate, and that's a big part of that than a traditional CD, which does have a penalty for early withdrawal. CDs can be part of a sound financial plan so that's basically what you can do. Now, if you want to seek independent and financial advice, you can do that. Learn which kinds of CDs might be best for you. You can speak to your banker or accountant, but particularly a financial advisor. Obviously, Axion offers another variety of CD, which is in the cryptocurrency space, and it is a supercharged CD, and so therefore there is higher risk, but there is a way higher reward. So I hope you enjoyed that one. Look forward to the next video for this basic series, and thanks very much for watching. Hope everybody enjoyed that, and catch me in the next one in this series, educating people around CDs and cryptocurrency. I will catch you in the next one. Feel free to subscribe, like, and share. Hit the bell for further notifications, and I will catch you in the next one.